Good morning, traders. It is 8 a.m. Chicago time on Thursday, March 30th, 2023. This is episode number 2440. How are you today? How are you trading? I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Digging into the convergent trading pre-market summary sheet this morning. Again, you can get this directly from Convergent Twitter feed at twitter.com/conv trading, CONV trading. It drops around 8:50 or so Eastern U.S. time. This morning, risk on again, mild risk on again. Nothing in the earnings calendar. We're speaking about some inflation numbers came out overnight. Spanish inflation almost halves to 3.1%, quite significant. That's very low inflation, especially for Spain. Fed's Chair Powell, latest forecast showing we anticipate one more rate increase and told House GOP that supply chain inflation mostly mitigated. FDIC reportedly mulls squeezing the biggest banks as it plugs a $23 billion hole with higher fees. The White House says that China should not use Taiwan President's Tsai's trip to U.S. as a pretext to step up aggressive activity around the Taiwan Strait and reiterated trip is consistent with one China policy. Meta bosses consider political ads ban in Europe, and Electronic Arts is cutting 800 jobs. Imagine that, a gaming company cutting jobs. Leading Trees cutting 440 jobs. Also, this morning we had let's see, I saw a headline here. Janet Yellen saying it is critical to re-examine whether supervisory and regulatory regimes are adequate for the risks that banks face today, and if necessary, to address them. Yeah, good luck with that. Bank lobby is one of the most powerful in Congress, so not sure what they'll do there. Imagine running a bank with $250 billion of assets and not having to report or to have a risk manager. Learned their lesson the hard way, I guess. So this morning we got a GDP here. GDP price index Q on Q final came in at 3.9% in line. GDP growth rate Q on Q final came in slightly better, 2.6% versus 2.7%. The initial claims came in a little bit higher or worse, 198,000 versus 196,000. And as I said, there are some inflation numbers out of Europe. Germany, the inflation rate year on year is at 7.4% versus 7.3 expected. The prior is 8.7, so still very high, but quite an improvement over the prior month. Inflation rate month on month is 0.8%. Came in at 0.8% versus 0.7% expected. 0.8% is what we got last month. This evening, we have a bunch of stuff here. We've got Fed's Barkin, Collins, Kashkari. So we've got the Fed parade. So watch your news feed today, or make sure it's on. And then we have U.S. Treasury Secretary Yellen speaking at 3:45 p.m. this afternoon. Unemployment rate out of Japan, and then Fed's Waller this evening at 8 o'clock. And then we wrap up with a 9:30 NBS manufacturing PMI number out of China. This is a key number, expecting 51.5 if you're trading at that time. Looking at the S&P, the S&P is trending up. It is really pushing higher and has hit the levels we talked about yesterday and the day before. The point of control shifted to 40.80. The low is at 40.52.50. If you recall, 40.50 was a key area for yesterday, and it was used as a base for the rally. The volume is 216,000, which is pretty much in line with what's expected. Inventory 62% long. Quick look at this video here. This is from the 28th. As you can see the date right here, this is from the 28th pre-market. And I talked about how the market is really primed to push and retest that Fed high and then squeeze into this 4100 area at least over the next week or so. And I also talked about this for the Nasdaq, if you recall. Didn't look so good on Tuesday, but for the Nasdaq, I said this is a triangle consolidation. The key element here is the Nasdaq's not giving up these highs, and it's very likely to push higher. Very likely to push higher. That's what that arrow is standing for. And then here's where we are now. Wait, okay. Here's where we are now. This is the Nasdaq, and we're trading up here. So we are testing this most recent high at 13,082. Easier seen here. So you can see that the triangle I was talking about, here was broken to the downside, and we talked about the test of this point of control before the market actually bounced, and then we skipped a bunch. We have a gap zone and to the other side, and we've broken out the upper side of the triangle, and now we are way up here. So this is just as expected. Just as expected. Why? Because this is an impulse. This is just a pullback. The continuation is not there. This is purely technical versus macro. I did a show yesterday. I don't know if you listened to it, but we had a futures radio show, our monthly futures radio show with Anthony Cordelli. We have Bob Elliott on and Tavi, and you know, there was talk of shorting, Apple being primed for shorting, and you have to take that in the time frame of that particular analyst and trader. But to me, and that's based on macro data, looking at earnings, looking at forward earnings, and whatever else they're looking at, I'm not sure. But from a technical perspective, it is hard to argue for a short here. Again, if a market finds sellers, truly finds sellers, it does one of these. It does what it did on the Fed. It moves up, immediately rejects, and then finishes at low. That's why neutral extreme up and neutral extreme down days are really important, especially at the peak or at the trough. So if we have been moving down, okay, and then we get a day that opens, and you know, it tests up, and then it comes down, makes a low, but then by the end of the day, it breaks the initial balance from the other side and finishes at the high, so that you end up with a profile that looks very much like this, with the market closing at the top. This you have to pay attention to, because this is the type of day that's likely to get some follow through the next day. This of course happened on news, so you have to, you know, take that with a grain of salt, like we did here. It took it back and went and closed the scene of the crime, and pushed all the way back into the stem before continuing lower. But this is showing strength. Despite what the Fed said, it came in and it still went right into what we would consider to be an excess high. And so we have to really take that into account, that hey, this is not selling off. You know, when things are really expensive or mispriced, the market moves away quickly. So that's the Nasdaq. S&P, same basic story, but you know, as I've been saying, the Nasdaq's relatively much stronger. The Nasdaq's really really hanging on to those highs a lot better. And so yesterday we skipped through Monday's range right here. We opened in a gap, and I talked about during the show yesterday, I talked about how there is a very low probability of a gap zone fill, that we would test the prior day's high, which was much lower at 4,950, and what it did is it squeezed through the high on Tuesday, and it just was a terribly sideways day until the close. So this is where we are. Look at what we have here. If you recall, the above the 73.75, which is the 70, I referred to it as 74 yesterday, is a key target. I really expected us. I mean, no kidding. I didn't expect us to have a full day a full day of trading between 32 and 62. I mean, that's really, for the current conditions, that's really tight range. Pretty awful. So the expectation is if it holds at 32 and we have a 52 point expected or historical target for day range, we would at least get to 74, but it just refused. I don't know if you held it long or short yesterday. It was painful, just like it was Tuesday, just like it was Monday. Really rough holding trades in here. And I'm not making excuses. I'm just telling you this is how I see it. Pretty strong close yesterday. We had a neutral day, very tight IB. Very tight IB. We had a neutral extreme up close. And so let's switch to this chart to look at where we are. So there's the pullback to the range of, to the top of the range of Tuesday. We have our magnet here. This is an important area. You can see this line right here, this magnet right here, that's an attraction, and it rejected it and moved away at the end of the day, only to settle at 40.57. And so this is quite bullish. This is a gap and go situation. The market attempted to sell off, and it was unable. So if you look at the shorter range chart yesterday, what we see is just sideways, put in the IB, then grind lower into that 32 area. And then what we did is we put in a low, and we continue. Look at how much overlapping, how many overlapping bars there are. It's just really tough trade right now. This is a temporary thing. The market doesn't sit in these kinds of conditions very long. Unfortunately, the market has been taking, overall participants have been taking the bigger moves overnight, like we saw yesterday and like we're seeing this morning. So the whole plan for the week, we talked about this on Monday morning, the outlook for the week is higher given the context and the narrative that we're in, but it's being done in the overnight session, which reminds me of like what, 2000 and I don't know, 2016 maybe, or 18, I don't remember. I think maybe probably 2018 is where we come in, and it's consistently 60, 50, 60 points of range overnight, and then 25 points of range during the regular trading hours, because everything's been priced in. The market has moved to an efficient price, and there's not much edge left, and this is what we have. So yesterday closed right in here, pretty strong close, took out the low, the IB low, took out the IB high, closed at the high. This is an example of those days, except this is a higher low, so it doesn't mean as much, but this is a neutral extreme up day, new. So very slight pullback into this cluster. This is a nice little, if you look at the footprint here, you'll see a tremendous war going on at 40.50. Huge war. You can see it right here. Tons and tons of bars, tons of bubbles, and lots of turbulence in the delta. and in the overnight session it pulls right back to that cluster, the top of the cluster, puts in a higher low, which would trigger a long for me, and then it starts running up. And it's been running up ever since, and now it reaches our 40.85.86 stock zone. We have a stock zone right up here at 40.86 and a quarter, reaches the 86 stock zone, and you get participation by buyers and sellers. These blue dots mean that there were buyers at the top here, but those buyers didn't really push price through, right? Which means that sellers were present and are willing to take all the bids or all the lifting that the market had in place. So this is setting up for a pullback, and as long as this low stays together and holds, this is very likely to push the overnight high for the overnight stat. So we have another situation where we're opening out of range in a multi-distribution profile. Guess what? Yes, it's happening, folks. The doobie smoking guy is here again. All right, a little bit of fun there. So this is what we have today. We've got a market that has trended up, but the key thing to look for today, the key thing to look for this morning, is how do these participants, remember we're rallying, right? So now we want to, okay, let me ask you this. If the market is rallying and you're looking at order flow, what are you looking for in the order flow? Are you looking for strength on the rallies? Are you looking for strength on the pullbacks, meaning aggression on the rallies, aggression on the pullbacks? What are you looking for? This is a little nugget here for those of you who are still learning order flow or struggling with order flow. If we have a market that is rallying, delta's positive, okay? Delta's at the high of the session right now, okay? What are you looking for on the open? What am I monitoring? So are we looking for aggression on pullbacks, or are we monitoring the strength of buyers? Are we looking for large lots to lift? I'll give you a hint. When the market opens today, all I'll be watching is the quality of the pullback. That's what's key. That's what's key. This is very much like when the market pulls back to a low. This is the low of the overnight session. When the market pulls back to a low, you're not really looking for how aggressive it's pushing that low. What you're really looking, which is the counterintuitive and is the opposite of what a person would impulsively want to do. What you're looking for is the quality of the test. And so we're testing the low, and we want to see the pullback. So it's moving back, it's pulling back higher. We're checking very closely what the quality of the pullback is. If the quality of the pullback higher is low, is poor, while testing a low, this creates an environment where the next time it rolls over, anybody that is still long or bought it at that level, because they're looking at that as a reference level, is likely to puke out, and they're likely to be trapped, so we expect it to go down. So the opposite for a rally. If the market's been rallying all night, we open up and we want to see, does an aggressive seller see this? Remember, markets rally to find sellers. The market's entire purpose, I know guys who've been here a while, Vernon, Rowe, B, NATO, RK, a lot of you guys have heard this, David Sapp. I see you here every day, and a lot of guys are probably in here going, oh my God, he's going to go into this auction theory stuff. But it's so important to realize that the market's goal is just like Amazon's goal. It's to bring sellers and buyers to a place where there's a whole lot of trading going on. Okay? Prices go up to attract more sellers. So a product is in demand, more sellers are going to step in to push it back to equilibrium. Market goes down, or there are no buyers. What happens? Oh, we got a sale, 20% off, 30% off, 40% off. Oh, buyers came in. We've got some trading going on. Oh, okay, we've got demand back to equilibrium. So the market's purpose, its only purpose, just like eBay's purpose, Amazon's purpose, Walmart's purpose, Target, Harrods, whatever, any Tesco, their purpose is to bring product and to bring demand, to bring supply and to bring demand together, and for them to battle on price, for them to find a price that moves merchandise. You remember when there were no cars on the market during the pandemic. Anyway, I'll stop in a minute. When there were no cars on the market in the pandemic, a used car was selling for twice its book value. Do you guys remember this? People stopped taking trains, people had to commute, people moved out to the suburbs, so they needed a second car, all that stuff. People didn't, school buses stopped working, so they needed a second car, all that stuff. Do you remember what happened? The price of cars went up 50%, 100%. Used cars. I could sell my pre-owned car for a price better than when I bought it new. And you automatically think, so that's price demand pushing really a lot higher. And so you automatically think the dealerships are killing it. Car salespersons are killing it. They're making huge bucks. But I have people in the business who sell exotic cars, who sell regular cars, and they hated it. Why? Because there's no equilibrium in the market. The market's skewed too far to one side. There are no cars on the lot to sell. If there are no cars on the lot to sell, no matter how much people want to pay, they could pay 600%. If you don't move a car, you don't get paid. And so supply is very poor, demand is very high, and nothing happens until supply comes in. That's a one-way market, of course, but the goal is the maximum profitability is actually selling 600 units at a markup of $2,000 rather than one unit at a markup of $10,000. So that's auction market theory in action in real life. And that's what we're looking for here. So the point being, as the market pushes higher, what we're looking for is, has the market found sellers up here? Did it find sellers? If it does, what it'll do is it'll have aggressive selling. They'll step in and take the best prices as quickly as possible. However, if it has not found sellers, what it'll do is it'll just liquidate the weak buyers, the late buyers, pull back, and it'll be very, very, very choppy before it turns back up. And if we detect that and the trend is higher, then we're looking for areas to lean long to continue the overnight trend, to attack the overnight high for the overnight high stat, to move the market into the next stock zone. Okay, sorry if this went on too long, but it's really important to understand this concept that when we open, we want to test not how well these guys are lifting. We want to check, in order to confidently put on a long with the trend, we want to check to see the quality of the sellers. The people who are pushing against us, how good are they? How strong are they? That's what gives us confidence. Not how well are other people getting long with me. That doesn't matter. What matters is how the sellers are able to push back. So the plan for today, to cut this out now because I'm way over. I get excited about this stuff, sorry. The plan for this morning, so we're looking at the relative delta here. Delta is at highs. The large lots, small lots, and very large lots are on the same side today using MBO data. And to me, this is likely to continue higher. So again, I'm going to do exactly what I just told you, which is to check to see what the quality of the pullbacks are and just look to trade from the long side. If you look at the overnight session, the point of control is at the high, and you have a very clear line in the sand right here. We do not want it below the 75 area. The 75 actually creates the first chance at a true test with a defined range, defined risk range right here from 75 to about 72. If this area does not hold, then we are very likely to push into 70, pull back weak inside of the prior week's high, which is the FOMC high, and then most likely we have a gap to settle trade. Then we would have a gap to settle trade. So if we get in here, collide, and don't step up and manage to push through this cluster right here and get on the other side of it, then I'm looking now for weak buyers for a short on the gap to settle trade. Otherwise, I'm looking for 4,100 above. 4,100 above. So if it pulls back and finds every excuse to not sell off, in other words, red dots that aren't moving price, I'm looking for it to push higher, take the overnight stat, the historical statistic, push the overnight high, start walking itself to the next century figure, 4,100. And we're well on our way to 4,160 that was discussed last week and earlier this week. Okay. Sorry, I can't cover other items. We have 4 minutes to start. I just got carried away with the auction stuff, but you really need to understand this. You really need to understand this to have a strong hand. You can't just look at bars and look at moving averages. You got to understand, what are these guys doing? What's everybody who got involved here with these large lots? What are they doing? And what happened right after? Did we actually squeeze through, or did we break lower? This is important information, because then when you put the trade on, you're not going to be one of these traders that gets on and takes it off for 3 ticks because it went in your direction. You're looking at a much bigger picture. You're more likely to trade fewer times in a day and hold much longer, and that's how you make real money in trading. There's always risk present, of course, but this is how you should look at things, and this is what I've been harping on for years now. This is why I started doing these Trader Bites 10 years ago. Anyway, don't forget to hit the like button. If you didn't click on hit the survey, the poll at the top of the live chat on YouTube, please do so. But make sure you hit the like button. And if you're not subscribed to the channel, it's free. Please do so. Subscribe to the channel so it ranks better. More traders find it. More traders stop listening to algo secret backdoor deals that they're privy to and are willing to mentor you in and all that stuff. Just look at the market for what it is. This is how I've traded for the last 16 out of the 23 years I've been trading. And you can just easily evolve with the market as opposed to just listening to someone else's indicators and whatever drivel for hours and hours. Good luck.